let's break down the absolutely brutal battle between leveraged longs and shorts that completely defined this week's Bitcoin price action. $114.5 million. That is the insane amount of money that was liquidated in a single 60-minute window this week. That's the price you pay for being on the wrong side of a leveraged trade. Now, this wasn't just some random price swing. No way. This was the direct result of hundreds of millions of dollars in leveraged positions acting like pure fuel for the fire, creating these huge price magnets. When that much money is on the table, it becomes a target. But here's where it gets really interesting. While the price chart looked like total chaos, the on-chain data tells a completely different and surprisingly positive story of real network growth. We're going to break down that exact metric at the end, so stick around. And hey, if you're finding this valuable, drop a like and share it. Okay, so first things first, let's look at the setup. This is how the market was coiled, just waiting to spring at the start of the week. Take a look at this heat map from December 14th. You see those bright yellow bands? That confirms there were massive pools of liquidity. We're talking tons of clustered leverage just sitting there. You had a huge target below the price at 89,000 and another one just above at 91,000. The market was a powder keg. So you have this huge concentration of leverage longs just sitting there below the price. It presented a perfect high-value target. And that's what led directly to the first major liquidation event of the week. And what's so cool here is you can watch the cause and effect play out in real time. On the left, you see that dense yellow band right at 89K, and on the right, just a few hours later, the price has plunged directly to that level and completely erased it. Gone. The key takeaway here is simple. This was a textbook liquidity hunt. The concentrated longs became the fuel, and the market moved in to take them out. Make sure you subscribe to the YouTube channel to track these kinds of setups as they happen. And you know what? The game immediately resets. Right after that drop, look at this. The market instantly builds up a brand new target zone. This time, it's an even denser band of liquidations forming right at $88,000. It never stops. But this whole battle wasn't just a one-sided affair. Oh no, the leveraged shorts who saw that drop and got a little too greedy, well, they were next on the chopping block. This chart from the 17th illustrates the squeeze perfectly. See that sharp vertical spike upwards? That was not random. That was a surgical strike designed to wipe out all the short side liquidity that had built up above $90,000. And the reminder here is absolutely critical. In a market with this much leverage, certainty gets punished, period. It doesn't matter if you're a bull or a bear. You are the target. Follow us on Twitter for more analysis as this whole thing develops. All right, let's move to the final act of the week. This is where the market made its most decisive move down, targeting all that rebuilt liquidity that was sitting below the price. You can see the final, absolutely brutal cascade right here. On the left, you see liquidity building up again, and on the right, you see the price just smash through multiple support levels at once, creating that peak $114 million liquidation spike we talked about at the beginning. So the net result of this week-long liquidation hunt? A 2% price drop that wiped out overconfident traders on both sides of the aisle. Just brutal. If you're getting value from this breakdown, do me a favor and drop a like. But you know, while the derivatives market was an absolute bloodbath, the underlying network metrics, they tell a completely different and honestly a much more bullish story. So here it is. This is the contradiction we teased earlier. This table shows that while the price was falling, the actual value locked on the liquid sidechain, which is a layer for faster Bitcoin transactions, exploded by over $1 billion. That's a staggering 232,000% increase. In 1 week. That is not a typo. The takeaway here couldn't be clearer. All this volatile action in the derivatives market can totally mask the fundamental on-chain growth happening underneath. The network is actually getting stronger, even as traders are getting wiped out. Subscribe to the channel for more deep dives into these hidden market signals. Which really leaves us with one final question to chew on. Is all this liquidation-fueled volatility just the necessary price the market has to pay for long-term network growth and adoption? Let us know what you think. Subscribe and drop a like below. Follow us on Twitter for more updates, and we'll see you in the next one.